And we are back here. Best ways to prepare for a recession. The most predictable recession we've heard of all times. The Federal Reserve got up yesterday and said, hey, unemployment is probably going to go up, ladies and gentlemen. The dollar is strengthening. Inflation is probably going to go up. And guess what? My interest rates are going to go up. So right now, with interest rates going up, is going to drive the demand for houses, right? You know, I purchased my home 2 years ago, 3 years ago. Interest rates are at 2%. Now interest rates are at 5 or 6%, right? What would you do to prepare for a particular recession? First question is you got to ask yourself, are you a short or long-term person? Take me, I'm a long-term person. What is Prince Dykes doing to prepare for a recession? Number one, I'm riding up oil. I'm riding a train on oil. So I purchase oil and I have shorts put into place. Well, not shorts, I'm sorry, I meant stops. Have stops put into place. I'm going to buy some oil. I'm going to ride oil for a couple of months. After those couple of months are done, I'm going to probably get rid of oil. I'm not a long-term person on oil because I believe at the midterm elections, things are going to get rough when Congress is start to focus on oil prices, and I don't want to be the person stuck holding oil. So short term, I'm looking at oil. Long term, I'm looking at consumer discretionary. Prince, why is this? When we had that big economical downturn in March of 2020, you probably see energy was at the bottom. In March of 2020, energy was like the worst performing sector out of all of these sectors. But guess what now? 2 years later, energy is the biggest and best performing sector and the only performing sector of 2022, essentially, out of the 11 sectors that we have. So now I look at it again. I said, what sector is performing the worst? It's consumer discretionary because of inflation. As inflation prices go and as prices go up with inflation, people buy less, especially things people don't go out to the movies as much. People don't go out and sit up on Amazon and just buy random stuff. People don't go shopping in high reflationary periods. People try to find ways to stash money. So with consumer discretionary being the lowest and the most beat up sector, I have to start with that sector to look for some gems that are in there. One of them being a household name, Amazon. Amazon is a consumer discretion. They just did a split. Was it Monday last week or whatever? What's it this Monday? I think it was this Monday. They did a split down to $126. Now they're fighting to stay above $100. So I don't know when the last time Amazon has been a long time. I can tell you that Amazon was $100 a share. It split 20-1 shares all the way down from about $2,400 all the way down, right? To a little bit over $2,000, I think, something like that. Don't quote me on that. But a couple $1,000s where Amazon was sitting at before it decided to do a split. Now Amazon has split all the way down to $100. I think it's $102 at the time of this recording. Now you are seeing people, that's where I'm looking. So for the short term, I'm looking at oil. For the long term, I'm looking at Amazon and consumer discretions. I may pick Amazon, or if you depend on your risk level, I may pick the entire sector. I think it's XLY, its entire sector. Or I may do a leverage bullish ETF called WANT, WANT. Looking into WANT, who's at $20 bucks, pretty sure it's under $20 now. So for about $15, this is something that when consumer discretionary was at its peak of November last year, this thing was over $100. Now that it's all the way down to $15, it's being thrown away, it's been forgot about. Everybody's talking about inflation and how it's going to hurt consumers and gas prices and all this other stuff. World is almost coming to an end. Politicians speaking. We got wars going on, all these things like this. Guess what? A year from now, a year and a half from now, we've been forgot all this stuff even happened. And I want to be in a sector or in a position that's doing extremely well that I can get paid back from. So preparing for a recession, if you are a long-term person like myself, for the short term, I'm going to look for oil, and then I'm going to ride the wave of oil, and then I will dump oil. Then I will probably look into, of course, I'm going to be buying an index fund, but looking at something that I think that can outperform an index. And consumer discretionary has gotten beaten up so bad that I think it's going to have the biggest rebound. Also, the NASDAQ, out of the top three, the tech companies have gotten obliterated. Anytime you see economical downturns happen, it's always those high-flying companies. Those are the ones who get hit the worst every single time. So, ladies and gentlemen, that would be my way to prepare. Another way is now if you are, it all depends on who you are, right? I would look at it this way. If I was a short-term person and I was getting ready to retire, hopefully you already had your money in bonds, and money into cash flowing assets that you didn't have to kind of worry about this whole equity market crisis or whatever. So it all depends on where you're at in life. If you're just a short term person, if a short term person, you just never know. But some key rule of thumbs are preparing. Number one, I would start to save money. I wouldn't be as conservative if you have a job, because usually once companies start to lay off, that nice job that you just got, you'll probably be the first one out the door if things got tight. So look at I will start to save money. And if I was a short term person, if I had the money to be able to invest through this, I would invest big time and consistently all the way through this. Just imagine, this is everybody last year was just talking about, man, I was so the financial illiterate people said, man, I wish I would have brought, I could have had the opportunity to buy. The people who was financially literate was like, man, I'm so glad that this dip happened so I can buy more. I can go in and buy so many things and buy things like that or whatever. Because I mean, right now, when you see the entire market just get slaughtered, all the sectors get slaughtered, you got to ask yourself why this is happening and what is causing this to happen. Great buying opportunity for investors. This is the time you take your money, the money that you have, and look for ways to put it into investments. Real estate, I'm staying away from right now because I feel like real estate is one of the hottest sectors of the market right now. They are hot, and you have interest rates. They're building houses like crazy. Interest rates are rising, and I think we're going to miss timing where we're going to end up having too many houses, not enough buyers, and you're going to see foreclosures throughout the neighborhood and houses that are trying to be sold that are not being sold. That's something that I don't, that's a market that I'm kind of weary of. I would love to have a rental property. I get it, I understand it. But right now, the market is just a little too sweet and a little too high for my blood and for my likings. I like to look for things that are on sale, things that are getting beat up. So when you're looking to just keep your money and maintain it, have it grow a little bit, that's when you look for things that are already stable. Something like the S&P 500, large companies. Like look at Coca-Cola. It's not going to go out of business, but it's not going to turn into Tesla either. So that's how I look at, pretty much the houses and things like that. You know, not weary of that. I want to find that small little company that's getting obliterated, that's going to shoot to the moon once we start to make our way out of here. And, I'm kind of plowing through paperwork. I want to see it. I wish I was that good to be able to pick them out, but apparently I'm not. So, but that's what I'm looking at. Consumer discretionary. I'm looking at the Amazons of the world, and I'm going to look deeper into some companies who've gotten beaten up in the consumer discretionary period that was doing extremely well. But you got to be careful. You don't want to be chasing yesterday winners. So I'm going to see who was doing extremely well financially and who has the potential to grow and make it through all this mess that we're going through. And because, you're going to have brighter days on the other side. So, ladies and gentlemen, the most predicted recession I've ever seen. Usually recession kind of starts after something we didn't see. We don't see it. We don't know it's coming. But nowadays, we all know it. Everybody's talking. That's one thing that makes me weary. It's just like they said, the old story when the guy was getting his shoes shined, and the guy that was shining his shoes said, hey, start giving him stock advice. When the guy was getting a cab to work on Wall Street, and the person that was giving him the cab was giving him the cab ride, so to give him stock advice, he knew he needed to go in and sell everything that he had. Pretty funny. That's the one thing that makes me weary. Everybody has predicted this recession, and since that everybody has predicted this recession, everybody is going in saying, hey, well, this recession is going to happen today. It's going to happen tomorrow. It's going to be like this. That's what makes me very weary. I said it months ago that I felt like a recession was necessary in order to get rid of this inflation, because that's what they did in the early 80s. But now that I hear so many people on this recession bandwagon, hey, y'all, the recession's coming. They're talking like it's a cab that's coming to pick somebody up, that everybody knows about this recession. And that's the one thing that makes me nervous, because whenever has the masses been right when it came down to Mr. Market? He had his own mind, his own way of doing things, and his own way of looking at things. So that's my synopsis on the, the market being so predictable that I am weary of it. And also, how would I prepare and to get into a recession? How would I prepare as an investor, right? As an investor, what would I do? How would I look at things to start to prepare for a recession, where I want to go? If you're an investor, if you just started investing earlier this year and last month, this is where you get your bones. This is how you earn your bones. Because if you haven't been through a market drawback, how can you really be an investor? You got to go through a market drawback. So this is like a qualification card that you're getting to see if you can survive through a market correction and a downturn and still come out victorious. So I'm proud to say back in the pandemic, I was there. 08, I was around and I was there, but I wasn't as heavy as I am today. So yes, I look to create memories and to do things like that. Well, hopefully you guys and girls got something out of this episode. The most predictable recession ever that we've never seen happen. Usually, I don't want to continue to beat a dead horse, but hopefully you guys and girls got something out of this. Also, you already know my name. My name is Prince Dykes. You can find me on YouTube. You can find me on Instagram. You can find me on Facebook. Think Tech Hawaii. You can go ahead and subscribe to them. Follow me here on Think Tech Hawaii. I have a bi-weekly show, The Prince of Investment. Shout out to Jay Fidel for that name. And shout out to Mike, the producer, that made this show happen tonight. So, ladies and gentlemen, until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe, y'all already know my name is Prince Dykes. I'm the Prince of Investment. Until the next video, podcast, or cartoon, peace, be safe. I'm out, and thank you.